All right. Matt, the mortgage guy, going live more than anything, just to put some information out there without editing a video and all the other stuff that goes into that. I think this news is pressing, and I want to get it out there because I've gotten the question dozens of times today. The inflation number for May is out, higher than expected, and most folks who are following me or talking to me are thinking about buying a house, are looking at mortgage interest rates, and want to know, okay, great, inflation is up. It's higher than expected. It didn't come down like, we know the plan had been. What does that mean for mortgage interest rates? So I'm just going to give you my 2 cents. I can tell you what all the pundits and all the people on TV say, but I prefer to keep it really simple and not have it be, infused with all the fancy words. Just my opinion on what is going to happen with interest rates. Just a quick snapshot and a quick kind of thought that I had that I think is important is knowing that all the things the Fed has been doing, driving interest rates up in an effort to slow down inflation, to bring inflation down. If inflation readings continue to come out like they did today, where today's inflation reading for May was 8.6% on year-over-year inflation, 1% increase month on month, which if you extrapolate that 1% in a month, know that means that's 12% over a year, right? That's not slowing down, right? From 8.3% to 8.6% year over year. Like in the short term, it's getting worse, not better, right? And what that means is the Fed will have to get more aggressive. They'll have to do more of what they're doing, which is raising the Fed funds rate, letting securities run off their balance sheet. And so everybody on TV is going to say, the Fed will do a 50 basis point rate hike in June, which is next week, that meeting. They'll do another one in July. And before, they didn't know what they would do in September, but now they're saying September, probably another 50 basis point hike, right? They might even have to do more. They might come out with a interest rate hike in between meetings, like a surprise one. They might end up doing 75 basis points. Immediately when this number came out today, mortgage prices got worse. And that is the reason. They got worse because the mortgage markets understand that more rate hikes are on the way, more pressure to raise interest rates to slow down demand to quell inflation, right? What they've been doing hasn't been enough. And there's some that are going to say, they're going to have to get drastic. They're going to have to do a 75 basis point rate hike on one of these to kind of shock the market and slow things down. Know that it's not always a direct correlation with the rate hike that's going to happen next week and the rate hike that's going to happen in July to the Fed funds rate. What moves markets more is when there's a deviation from what we expect, right? Because this June and July Fed rate hike is something that has already been baked in. We've been expecting it, so it wasn't going to affect the markets really much at all. But now we get a higher inflation reading than we were expecting. We know that the Fed is going to have to react, and the Fed is going to, get a little bit more aggressive with monetary policy. That is the reason why you see, mortgage-backed securities down 70 basis points on the day. And I'll show you that chart in case anyone's interested. It's a pretty volatile day. I'll say that, if nothing else. Let's share screen here, and I'll show you exactly what's going on in the land of mortgage. There's the 10-year Treasury, up to 315. Mortgage-backed securities down 70 basis points. And for anybody who wants the layman's terms, the red means rates are worse. 70 basis points probably translates to between an eighth and a quarter in actual interest rate, right? Here's the chart. We can see pretty clearly that we're down rather significantly. And this, all the way back to maybe early April, it's been relatively calm, right? There hasn't been like, it hasn't been volatile, right? And then today, is probably the biggest candle we've seen since, back on April 14th. This is probably a day where 80 or 90 basis points were lost. We'll see how it all shakes out. I would imagine that what the Fed says and does next week is going to have a pretty big impact on what happens with mortgage rates. They've got their meeting next week. We all expect them to raise the Fed funds rate by 50 basis points. If they do more, that might cause interest rates to get worse. There's no way they're doing less. And really, like most Fed meetings, more important than what they do is what they say. Because rest assured, folks are going to have questions for Jerome Powell. Hey, Jerome, we thought that we were getting inflation under control by raising the Fed funds rate and monetary policy changes that you've already, implemented in 2022. This train is moving faster, not slower, month over month, 1%. And, 8.6% year over year. This is not good. What's the plan, right? And depending on how he responds to what the plan is, it'll be interesting. Here's, the Mortgage News Daily that I kind of default to because it's a good rough estimate of where mortgage rates are. Look at that spike today. Bam! Went from 5.55 to 5.85. And granted, this is an average. You may be better, you may be worse. Look at that year over year change. Interest rates are 3% higher than they were a year ago. That's wild. I probably won't get into a really in-depth what this means for the real estate market, but that it's going to have an effect, right? Interest rates affect affordability. And, unfortunately, it is what it is. Sitting in my seat with hundreds of people pre-approved, having the conversations every single day, talking to real estate agents, the ones who are entry-level buyers, first-time home buyers, are really going to be hit the hardest. I really don't know if there's programs that can make up for this, spike in affordability. Is there's no easy way to put it, right? When prices go up 30% and rates go up by 3%, it's no doubt putting a lot of pressure on folks that are on the cusp of home ownership. I say that prefacing, I literally heard this morning, there's a big plan laid out by Fannie and Freddie, home ownership, in underserved communities, and a bunch of programs that, between now and 2026, like they've literally got a 5-year plan, for minorities, for first-time home buyers, for underserved communities. I just don't know how they're going to do that, right? If it's like a small discount to the mortgage insurance, or a small discount here, a little bit of down payment assistance here, I'm not sure if that's going to be enough. I mean, that's just me being honest about it, right? So anyhow, wanted to go live real quick to talk about that stuff. If there's questions, I'd be happy to answer them. There was no real purpose for this besides just talking about inflation number, what that's going to do with mortgage rates. This video will be public on my page. Bill Morgenstein, how the heck are you doing, brother? Good to see you. Hope you're doing well. Glad you bought when you did. Glad you got the smoking interest rate that you did. I don't recall the exact rate, but I know it wasn't in the last 6 months, so I know it's a good one. So hope all is well, man. Hope you're enjoying the new house. Appreciate you entrusting us with your mortgage, and where to come. Any advice you need on any future deals, any friends and family you got that are looking to get started. If I were to direct them anywhere, I would just say go to greatmortgagebroker.com, fill out the form, let us know how we can help. And yeah, next time we talk, Bill, I got to tell you about all the great things we're doing at U Mortgage, going nationwide, serving thousands of folks. Maybe I'll make a video on that next week. Just our vision summit, where we're going to be by the end of 2024 as a company. I don't know if anybody has, desire to see and hear some of that, but maybe I'll share it anyway. Yeah, they did have an insane move. I guess, a 0.25%, like that's about the biggest you'll see, right? I remember when there was a shock in 2013 that they called the taper tantrum, and the Fed was doing their thing, messing with monetary policy. And that summer, I wasn't even a licensed originator yet, but I was starting to get the licensing. I was starting to look at mortgage stuff, and I was starting to kind of get a feel for it. And that was a wild summer. They went up 0.5 point within a matter of a couple of weeks, interest rate wise. Yeah, the 2-year went over 3% today. It's going to be a wild ride. It's going to be volatile. So stay tuned. Next week, I think I'll go live Monday at 3 p.m., do a Q&A. We'll see what happens Monday, and that'll be an interesting day to watch. Wednesday, when the Fed, comes out and announces we're doing 50 basis points like we thought. Like I said, we're going to more pay attention to what they say, not necessarily what they do. But anyhow, that's all for today. Thanks for joining. Mondays, 3 p.m. Pacific Standard Time. I'll be on next Monday. Just wanted to get this out there just to talk real quickly about inflation. It's out of control. The Fed's going to have to get aggressive, so it's going to be an interesting time. It's going to be volatile. Literally locked 2 loans in yesterday, and advised the clients, if you like it, lock it. And I'm glad we did, because quite the move today. Not many people are going to be in the position to do like you did, Bill, with a 2.84%. So enjoy that low rate while you got it. Thanks for watching, guys. Take care. And until next time, we gonna see.